Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, December 12th with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars, sentiment, structure, and trend. And we start with our market trend model as our core to look for the day. Obviously, we do see the market trend model here, the tick RC. We continue to see the bolded CT, which is our intraday indication moving look of the bolded white line there, continues to the downside, even though we did see price appreciation yesterday. We did see some selling towards the end of the day, but as the bolded CT continues to the downside, we will monitor that, as this is still a bearish state, even with price appreciation. I will say the slope of the bolded CT did abate a little bit yesterday, and we did have a little bit more sideways action, but the slope is still negative and to the downside. And then we're under those most important moving averages, which are the three other white lines there, which are intermediate time frames. So at the least, we would need to see the bolded CT start crossing above those moving averages to give us a back towards some sort of bullish state, and then looking to see if buyers are going to continue to take control. And then the long-term look is the red and cyan colored ribbon, and it continues to expand the downside with a negative slope. So our longer-term bias is still bearish on the overall market there. We did see the filtered cumulative tick sideways to down yesterday. We did lose some of that linear selling from the two previous days, which are very notable, but we'll continue to watch that today and see how that plays out as we head into the opening today. Looking at the SPXP, all expiries turned on. We are still call dominated, even with the pullback and the look of the CT. The moving averages, or sorry, the transition is unambiguous and very narrow. We've seen that multiple days in a row. So our if-thens can be laid out to execute pretty well. 60, 70, 60, 75, pretty important. We've saw that multiple days in a row. If you overlay the trading view levels that we produce, zero gex is right around 60, 70. We see ingex at 60.55 and pgex at 6100, which is a confluence with COI. So we moved up towards that 6100 yesterday, which was our if-then thesis if we were above that 60.50 and 60.75, which was the P-trans. So we got close to it. And then we saw some most likely profit taking of those call speculators as we closed out the day. Again, volume was very important yesterday. We had positive call and centroid slopes for most of the day. So that gave us the overall sentiment that we were most likely going to grind to the upside. So we'll watch that as we head into today. The JPM strike there indicated 60.55 could also become an area where we move down towards. But I believe we have our basically our goalpost outlined pretty well: 60.50, 60.55 to the upside, 6100. We've been below that 60.55 for one day, but we recovered pretty rapidly, and then we crossed all the transitions yesterday. I posted a chart yesterday in the voice chat about basically, I called it a textbook look. I hate to use that language, but really it was a great overall example of how price reacts and acts around our transition levels, and what the education component of our GammaEdge framework really tries to hit on. So make sure you look back at yesterday's price action, look at the chart in the voice chat, or overlay it yourself and really study it. How once we move through those transition areas of zero gex and P-trans and enter those call dominated environments, and then if you're using the vol-m command intraday or the cent command to really look at those slopes, you can really have an advantage and be on the right side of the market overall, and to help your trading. So SPX gex ratio, we did see it rebound yesterday. We discussed as it moved down towards that 1.2 what the implications were, and what we would be looking for a rebound. So obviously short dated calls are winning out now, at least in the left hand plane, and the right hand plane covering those in the money and out of the money puts. But we'll continue to watch this also. This may just be a short-term phenomenon. As you see, price did move back up to an area where we could see some possible stalling. So if the gex ratio continues to fall, understand what the implications are there and what that means, that the short-dated call gamma continues to degrade, and the put gamma will be overriding that, and then we could possibly get a confluence of a pullback within the overall price action within the structure. So delta balance is showing a little bit stronger look on out in time. higher than we previously had. We do say that left-hand plane, though, continue to drop on out in time towards zero. So understanding what is occurring in the left-hand plane and right-hand plane and what is giving you these views on the delta balance is also very important. But for as of now, as we head into today, we do see a recovery of the GEX ratio and a recovery of the delta balance. The zero DTE, these laid out these possible legs of the iron condor. There's an extensive commentary in the SPX game plan. I encourage everybody to read that and understand it. Ask questions in the hashtag technical questions channel. Or if you want other answers, we can certainly cover those on open mic on Sunday. But understanding these could be possible legs of an iron condor. We've already outlined on the full expiry basically where those goalposts were, 60.55 to 6,100, and that pretty much matches where our zero DTE intraday possible iron condor is also. So understanding that we need to get above transition, 6,100 would be that upper strike that we could possibly see some stalling. If we do not see that, then our if-thens for the drunken sailor range would be above 6,100. We could possibly grind higher towards that 6,125 level. We do have these outlined with the net OIs, the path of upward price appreciation. And then conversely to the downside, if we're below the transition or within that overall drunken sailor range, we could test the bottom leg of that iron condor or the bottom edge of that drunken sailor range, which would be 60.60, 60.55, where we've pretty much been bouncing around for the past week within this overall range, overall drunken sailor range, and really stuck kind of between 60.50 and 6,100. Net stat command will help you intraday. We continue to post those, understand that right-hand plane strike really is dug in there at 60.95 for those OTM calls. And then obviously left-hand plane strike, 6,000 on the ITM calls. So that's significantly away from where our price action is, but then understanding net charm, gamma, and vanna are sitting there at 60.60, 60.65, which we've already really discussed the confluence of those, that lower leg of the iron condor and then the full complex there. So heading into +1 DTE, which would be tomorrow. Transition narrows slightly, but again, really those same levels that we've noticed for the balance of the week, 6,100, PGEX. We do see COI move up there, which is out of range, but 60.75, 6,100 in the lower area here of the transition of 60.50. So our if-thens for this morning, or if-thens for today, heading into today. I've outlined the drunken sailor range, obviously all the way up there towards 6,100. That's where PGEX is. We got as high as 60.93 yesterday, and then we saw some stalling. So I'd anticipate the same sort of type of price action today unless we see a significant amount of OTM calls come in. And then depending on what the structure of the iron condor is, if we're above it and how that plays out for today. But my overall thesis for today is range bound within this overall structure of 60-60, 60-70, 60-75. If we're above 60-70 to 60-75, then I would lean more towards the bullish side. Grinding up towards that 6,100. If we stay below the zero GEX and 60.75, I'd anticipate us to move down towards the bottom area, lower leg of that iron condor, 60.60, bottom of DS. If we lose the bottom of the drunken sailor range, I'd look for obviously 60.55 here. In GEX, and then below that down towards possibly 60.40 if we do see the vol-m command indicating negative call and put centroids, which not really leaning towards that direction today. The left-hand plane is very well dug in within the money calls. We'd have to have a significant market structure and sentiment change for us to see a large amount of weakness creep in, which is really not being shown on the structure and sentiment at the moment. So that's my thesis for today. Again, within the overall drunken sailor range, we've kind of been trapped within that range. You can scroll back for multiple days here. We did come down and test 60.40, which was just an undercut of that 60.50 level, but rebound pretty quickly yesterday. And then if you continue to scroll back, and what I like to do is go to a higher time frame. So 65-minute. You could really all the way go back down to here where we were at 60.40, 60.40, 60.40, all the way back to the beginning of December. So we've really been trapped within this 60.40 to 6,100 range. And I don't anticipate anything changing really in the near term future unless we see a significant change in the structure and PGEX start to move up towards 6,200 and then see a significant amount of OTM call speculation. So play accordingly. Within the overall drunken sailor range, it could be very choppy. If we lose 60-60, then watching these lower levels down here, opportunistic shorts down towards 60-50 and then 60-40, and then really not expecting much expansion above 6100 as I can see so far. So hopefully that helps this morning. We'll be in the Discord in a few minutes. Thanks, everybody.